The Wuhan virus has cost the world approximately $16 trillion. Recession has hit all 5 continents. 400 million jobs have been lost. FY 2020 saw insolvencies and closures. Global FDI fell 42%. FY 2021 is about building back. This year is about building back. It's about not letting history in China repeat itself. Morgan Stanley projects a global GDP growth of 6.4% for this year. 5.4% is the IMF's projection. The World Bank says the global economy will expand by 4%. Now, for any of these numbers to convert, countries around the world will have to adapt to the changing economic order. They will have to keep a close watch on emerging trends, while also working towards diversifying their supply chains from China. The Wuhan virus crisis has come with opportunities for radical reform. Building better healthcare, for example. The world must also look at realigning priorities. Japan is already at it. Over 40% of Japanese tech companies are shifting their manufacturing base from China. West Asia is adjusting to the new oil order by diversifying its economy. The challenge before the United States is to get a grip on the pandemic before rebuilding its economy. India is gearing up for its first budget since the pandemic. It will be tabled on the 1st of February. The country is already preparing for the future by encouraging investment in the electronic vehicle sector. It is working towards becoming the world's largest EV market. India is also trying to leverage its online market. A recent report from the United Nations says India's foreign direct investment grew 13% in FY20. 13%. Much of it had to do with investment in the digital sector. In the last 1 year, the Wuhan virus pandemic pushed many consumers and companies online, and this shift in consumer behavior was more evident in India, which is the world's second biggest online market. India was among the only 2 major countries that saw an increase in FDI despite the pandemic. $57 billion. That's the kind of money that poured into India last year. The number is likely to increase in FY21 as more companies move out of China. The United Nations report that we just referred to also points at an interesting trend. It says inflows to the US and Europe dropped into negative territory, but in South Asia, FDI rose 10% to $65 billion. And this growth again was steered by India. New Delhi will be looking at all these trends closely as it prepares for the 1st of February. WION is now available in your country. Download the app now and get all the news on the move.